What is up, Bitcoin Bulletin fam? Get ready, because the crypto world is spinning faster than a block confirmation, and we've got the must-know updates that are shaking the foundations. You think you've seen it all? Think again. The markets are buzzing, strategies are shifting, and the future of digital assets is being written right now. If you're not dialed in, you're missing out on the conversations that will define the next wave. We're diving deep into the plays that are setting investors up for success, uncovering the risks that are being cleverly sidestepped, and exploring the bold moves that could change everything. From corporate treasuries to national strategies, from market signals to asset rotations, this is your essential briefing. Don't blink, don't breathe, just get ready for the intel that matters. Let's go. First up, a titan of the industry is making strategic moves, navigating legal complexities and positioning itself for a major long-term play. We're talking about a company that's not just holding Bitcoin, but is actively making it a cornerstone of its future. Is this the ultimate blueprint for integrating digital assets into mainstream finance, or is it a risky gamble? We've got the breakdown that will tell you everything you need to know about why this move is being hailed as a strategic buy for those looking to ride the crypto wave for the long haul. Then, we're jetting off to El Salvador, the nation that went all in on Bitcoin. What have they learned? How are they leveraging this digital currency for institutional security and future-proofing their holdings? This isn't just about a country adopting a new currency. It's about pioneering a new era of financial resilience and innovation. We'll explore the groundbreaking strategies they're deploying and what it means for governments worldwide looking to embrace crypto. Stick around, because the insights are about to get even hotter. And you won't believe the numbers we're seeing. Bitcoin's price is hinting at some serious positioning imbalances, with analysts pinpointing specific price ranges that could signal a massive opportunity. We're talking about hitting that sweet spot that could unlock significant gains. Are we on the verge of another major surge? We've got the expert analysis on where the smart money is looking and why this could be the moment to pay attention. Finally, in a move that's sparking serious debate, we're seeing a significant rotation happening in the market, with capital seemingly flowing out of Bitcoin and into a surprising alternative. What's driving this shift? Is it a temporary trend or a fundamental change in investor sentiment? We'll dissect the data and tell you why this could be a game changer for your portfolio. You do not want to miss this. Make sure you're subscribed, hit that notification bell, and smash that like button because you're getting the vital updates first, right here on Bitcoin Bulletin. Corporate treasury strategy shifts dramatically. Mega-cap tech company MicroStrategy, known for its substantial Bitcoin holdings, is strategically navigating potential legal headwinds concerning its Bitcoin treasury strategy. This proactive approach aims to bolster its position as a long-term, crypto-backed investment vehicle. The company's aggressive acquisition of Bitcoin, now exceeding 200,000 BTC, has positioned it as a significant player in the corporate digital asset space. However, this bold strategy has not been without scrutiny, particularly regarding the legal implications for companies holding large amounts of cryptocurrency. Recent developments suggest that MicroStrategy has taken steps to mitigate these risks, focusing on optimizing its corporate structure and financial reporting to comply with evolving regulatory landscapes and investor expectations. This includes exploring various legal and financial mechanisms to protect its assets and shareholder value. The company's leadership has emphasized its long-term conviction in Bitcoin as a superior store of value and a hedge against inflation, viewing its treasury strategy not as a short-term trade, but as a fundamental shift in its corporate finance approach. Analysts are closely watching these moves, with many seeing them as a potential blueprint for other corporations looking to integrate digital assets into their balance sheets. The mitigation of legal risks is seen as a critical step in this integration process, potentially paving the way for broader institutional adoption. For investors keen on exposure to cryptocurrency through a more traditional corporate structure, MicroStrategy's strategic adjustments are being interpreted as a strong signal of confidence and a move that enhances its attractiveness as a strategic buy. The company's ability to successfully navigate these complex legal and financial waters could set a precedent for the industry, demonstrating that significant Bitcoin holdings can be managed responsibly and strategically within a corporate framework, thereby reducing perceived risk for both the company and its stakeholders. This careful maneuvering is crucial for maintaining investor trust and ensuring the long-term viability of its Bitcoin-centric strategy. The market is responding positively to these developments, viewing them as a sign of prudent management and a commitment to long-term value creation. This strategic realignment is a crucial development for the broader market. But what's next on the global crypto adoption front? We're heading to El Salvador to see their latest moves. El Salvador's Bitcoin Blueprint, Institutional Security and Future-Proofing. El Salvador continues to pioneer the integration of Bitcoin into a national economy, with its strategy now serving as a potential model for institutional crypto security and future-proofing national holdings. Since adopting Bitcoin as legal tender in 2021, the nation has accumulated a significant amount of BTC, which it manages through a sovereign treasury. The government's approach emphasizes not just the use of Bitcoin for everyday transactions, but also its strategic role in enhancing financial security and resilience against traditional financial system vulnerabilities. El Salvador has implemented various initiatives, including the issuance of Bitcoin-backed volcano bonds and the development of the Chivo digital wallet, aimed at fostering broader adoption and providing secure access to Bitcoin for its citizens. The country's commitment to Bitcoin is underpinned by a belief in its potential to attract foreign investment, stimulate economic growth, and provide a hedge against inflation and currency devaluation. By holding Bitcoin as part of its national reserves, El Salvador is positioning itself as a forward-thinking nation, ready to embrace the technological advancements of the digital age. This strategy also involves building robust digital infrastructure and regulatory frameworks to ensure the security and integrity of crypto-related activities. Analysts suggest that El Salvador's experience offers valuable lessons for other countries considering similar paths, particularly in managing the technical, regulatory, and economic aspects of integrating a volatile asset like Bitcoin. The nation's proactive stance on institutionalizing Bitcoin, focusing on security and long-term value, provides a compelling case study for how sovereign entities can leverage digital assets to modernize their financial systems and secure their economic future. The ongoing efforts to secure and manage these holdings are crucial for maintaining international confidence and demonstrating the practical benefits of this bold financial experiment. This pioneering work is setting a new standard for how nations can think about their financial reserves in the 21st century. Stay with us as we analyze the intricate market signals. What's next for Bitcoin's price positioning? We've got the details. Bitcoin price signals strategic opportunity at key levels. Bitcoin's market dynamics are currently indicating significant positioning imbalances, with analysts identifying a critical price window between $108,000 and $110,000 as a prime opportunity for strategic investment. This specific price range is being closely watched as it suggests a potential inflection point where market sentiment and technical indicators align to create a favorable environment for substantial gains. The underlying sentiment driving this analysis stems from a combination of factors including increasing institutional interest, the ongoing development of the Bitcoin ecosystem, and macroeconomic trends that favor scarce digital assets as inflation hedges. Experts suggest that these imbalances in positioning, where traders and investors may be overexposed or underexposed at certain levels, can create volatility that, if understood and acted upon, can lead to significant rewards. The $108,000 zone is particularly noteworthy because it represents a confluence of technical resistance and support levels, combined with anticipated shifts in market participant behavior as the price approaches these figures. For long-term holders and strategic investors, entering or increasing positions within this range could prove to be a highly advantageous move, capitalizing on what some predict to be the next major upward trend. The anticipation surrounding these price levels is palpable within the crypto community, with many viewing it as a confirmation of Bitcoin's growing maturity as an asset class. The ability to identify and act on such strategic opportunities requires a deep understanding of market mechanics and a forward-looking perspective, which is precisely what seasoned investors are employing. This focus on price positioning highlights the evolving sophistication of Bitcoin as an investment, moving beyond simple speculation to a more strategic financial play. The current market sentiment suggests that those who can navigate these specific price points effectively are poised to benefit significantly as the digital asset continues its trajectory. But the market isn't just about Bitcoin, there's a significant rotation happening elsewhere. What's drawing attention away from BTC? Ether ETF sees capital rotation amidst shifting market trends. The ProShares Ether ETF, EETH, is currently experiencing a notable shift in investor interest, with capital appearing to rotate from Bitcoin towards Ether. This trend is particularly significant given that EETH has recently seen gains of over 100% since early April, trading around $76.08, though still below its March 2024 peak. This rotation suggests a potential change in investor sentiment, where Ether is being favored for its income-generating potential or as a strategic diversification play, possibly due to the introduction of Ether-related financial products like ETFs. While Bitcoin has long been the primary focus for many institutional and retail investors in the digital asset space, the emergence of liquid and accessible Ether investment vehicles is broadening the market landscape. This move from Bitcoin to Ether could be influenced by several factors, including anticipation of further developments in Ethereum's network, such as upgrades or the potential approval of spot Ether ETFs in other jurisdictions, similar to the Bitcoin ETFs that have already launched. Investors might also be seeking to diversify their crypto portfolios beyond Bitcoin, looking for assets with different use cases and potential growth drivers. The income aspect mentioned could refer to staking yields or other DeFi opportunities available on the Ethereum network, which might be more attractive than Bitcoin's current yield opportunities. This rotation is a critical indicator of evolving market strategies within the digital asset ecosystem. It highlights a maturing market where investors are becoming more sophisticated, differentiating between assets based on their specific characteristics and potential for generating returns, rather than treating all cryptocurrencies as a monolithic investment class. The performance of EETH underscores the demand for regulated, accessible ways to invest in Ether, signaling a broader trend of institutional and retail capital seeking exposure to the second-largest cryptocurrency. This strategic shift warrants close attention as it could signal a new phase in the digital asset market, where diversification and income potential play increasingly important roles in investment decisions. That's all the critical news for today. Let's do a quick recap and then get you out of here. Bitcoin treasury legal risks mitigated. El Salvador's Bitcoin strategy is a model, Bitcoin positioning imbalances at $108K, $110K, and Ether ETFs are attracting capital. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. Follow us on all social platforms for more insights. We'll see you next time on Bitcoin Bulletin. Bitcoin treasury legal risks mitigated. El Salvador's Bitcoin strategy is a model, Bitcoin positioning imbalances at $108K, $110K, and Ether ETFs are attracting capital. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. Follow us on all social platforms for more insights. We'll see you next time on Bitcoin Bulletin.